Good morning, you're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Standard Chartered Bank has slashed its Philippine growth projection for 2021 to 4.6%. That's from 6.1%. Stanchard's updated forecast is below the government's revised target of 6 to 7% growth for this year. Now, the bank said the slow pace of recovery in private investment and the delayed pickup in the government's infrastructure program are the key drivers for this projection cut. Chidu Narayanan, an economist for Asia at Stanchart, said private investment is likely to remain very subdued given that most corporates are still at overcapacity and the demand outlook is very soft. The bank is also not expecting a huge increase in infrastructure this year, according to Narayanan. He said the earliest that the Build program will pick up sustainably will be sometime in the mid-third quarter. Narayanan also noted that consumption is likely to remain muted in the second half with cautious sentiment preventing consumption from accelerating. Metro Manila will now be under the regular general community quarantine until the end of this month. That means no more extra restrictions for the residents of NCR. President Rodrigo Duterte has approved the IATF's recommendation to keep NCR under GCQ until July 31st. Meanwhile, some nearby provinces like Laguna and Lucena were placed under GCQ with heightened restrictions until July 22nd. Additionally, Iloilo Province and Iloilo City were placed under the stricter Modified Enhanced Community Quarantine or MECQ until July 22. That is still subject to adjustment though if cases improve. It has been 488 days since parts of the country were first placed under a lockdown, and the Philippines continues to see the second worst COVID outbreak in Southeast Asia, trailing behind Indonesia with 1.5 million cases and over 26,000 deaths. Now, let's take a quick peek at whether there is any market reaction to that, so to speak, slight easing in quarantine restrictions. You can actually see a bit of cheer here. That's up by 0.4% for the index, but still nevertheless below those 7,000 coveted levels. So recall that here, at least in the Philippines, the daily new cases has eased to below 6,000. I'll pull that out for you for over a week from a high that we had seen in April, more than 15,000 cases a day, if you recall those worrisome figures. However, we have to keep in mind it's still one of the worst outbreaks in the region. We've got 1.49 million cases as of Thursday. Now, this, of course, comes even as other countries in Southeast Asia have begun imposing new curbs amid the Delta variant. Southeast Asia cases have jumped 41% over the past week to more than 500,000. That's according to Bloomberg's and Johns Hopkins data. Deaths rose 39% in the past 7 days through Wednesday, the quickest pace in the world. And our vaccination rate in the region, Southeast Asia, is just at 9%. We are lagging Western Europe and North America. Over there, more than half their population have already received shots. So let's take a quick peek at our movers for this morning. 5 minutes into trade, you've got JG Summit up by 1.8%, followed by MPIC and Alliance Global. So it does seem to be the case that the Conglos are leading the charge here this morning. Now, just a couple of stocks to be watching out for here. The Dennis Uy stocks are in focus. This, as the Department of Energy has said, it will be reviewing Chevron Corp's sale of its 45% stake in the Malampaya gas project to Udena Corp of Dennis Uy. Senator Sherwin Gatchalian, who is the head of the Senate's Energy Committee, asked the department to look into the buyer's financial health. You can see, however, Chelsea trading in positive territory, up by close to 1%. Meanwhile, the telco arm seems to be doing okay, not from a stock perspective, but at least from expansion. They had announced on Thursday that they have now expanded to 18 more areas starting July 15. So Dito Telecom will be available commercially in 158 cities and municipalities. According to a technical audit report by RG Manabat and Co., they are currently capable of serving 37.5% of the population. I recall they have a commitment to cover 84% of the population by the end of its fifth year. And just a quick peek on the mining space. This, of course, a lot of eyes are on that Oceana gold mining, and they have been required to list their shares in the local bourse amid the plans to reopen their DDPO gold and copper mine as soon as possible. Recall that the government renewed its contract for another 25 years, but under this new deal, they need to list at least 10% of common shares on the stock exchange within the next 3 years, plus must not offer less than 25% of the annual gold production for purchase by the Bangko Sentral. So very interesting there. One to watch, and a listing of Oceana Gold here in the local bourse, and another listing to be watching out for. Of course, SEC has cleared Del Monte's IPO plan that has been a long, long time in the works, finally getting the go signal from the Securities and Exchange Commission. Now, here to chat with us about all of these stories and more, we have with us Miguel Agarao. He's the Vice President of Philequity. Good morning, Miguel, and welcome back to Businessworld Live.
Good morning, Danie. Long time no see.
Miguel, let's quick reacts here on GCQ extension without restrictions now. Was this something that markets are going to feel positive about? Does that even have an impact on your expectations in terms of reopening of the economy, in terms of bottom line figures when it comes to corporate earnings?
Okay. Good morning, Danie. Well, it's a sign that things are improving significantly on the ground as far as COVID-19 is concerned, so that a slow reopening of the economy is something that can be done with relatively low risk. That will not only be good for sentiment, it will be good for corporate earnings. I just want to note that when you had a lockdown in March, April, of course, there's going to be some impact on your 1Q and part of your 2Q earnings as well. So there's just going to be impact on that part. So maybe you're going to see a full improvement sometime in 3Q, assuming you don't have a lockdown occurring again. So while it's a good thing, if you look at what's happening in other Asian countries, we just have to be a little worried that we don't have the same experience as what we're seeing in India, Indonesia.
Yeah, so can you comment on that? This easing of restrictions is still the path that the government has been taking, and hopefully our cases are also being contained. But you do see the trend that's already going on in the rest of the Asian regions. How big of a risk is this that we will be going back into these wider and stricter lockdowns? And has this been, are investors pricing the Asian lockdowns in our own local index?
Well, what I can tell you is I don't think they're pricing in the Delta variant coming in and a resulting lockdown from that. Because if they were pricing that in, our market would be way lower than where we are right now. So it's crucial that while we reopen the economy, we ensure that the Delta variant does not get into the country. So the decision to actually block travel from India before and more recently Indonesia is a step in the right direction. We hope it's enough.
Do you think that foreign investors will then be favoring our markets because of the fact that we still seem to have less restrictions than other Asian countries? Will this be a catalyst for the foreign direct investments, but also the net foreign funds inflows to start coming back in?
Well, if you look at what happened in the past, say, 8 weeks, there was a 2 to 3 week period at the start of June where you actually saw foreign inflows come back in. But recently, you see foreigners starting to sell again. Not the way they sold at the start of the year 2020, 2019, 2018, but there are trickles of foreign selling again. And our market has actually been suffering from very low volume. We're trading maybe between 4 to 5 billion daily turnover a day that used to come from 7 to 7.5 billion. So volume has been going down quite a bit. There is some level of disinterest. I mean, put yourself in the position of the foreign funds. They probably don't know what to do. We're reopening, but we have not been hit by the Delta variant. So you're going to make a judgment call that if everyone around us has the Delta variant, that we're not going to get it, right? So
Right.
I'm not sure they know what to do as well also.
Okay, let's talk about some recovery stories here. Whenever I talk to
Mm-mm.
analysts, they're saying that, like as you mentioned, everyone is still edgy, particularly foreign investors, but the businesses themselves seem to have some confidence pa rin. You've got Shakey's now saying they'll open 30 new stores this year. 7-Eleven, they will be returning to profitability in the second half. And then you compare this to, the growth downgrades that we've been seeing, the
Mm-mm.
outlook, the non-performing loans. How can you reconcile this? The corporates they're also doing a lot of buybacks in terms of their shares.
Yeah, well, you have to split it because, like, for our growth, I'll deal with our growth first. 70% of our GDP is domestic consumption. You had the lockdown earlier in the year, and then you had inflation quite high also end of last year, start of this year. The effects on domestic consumption are not something like when inflation goes below 4, consumption comes back. So there's a lag effect there, and there's going to be an impact on your GDP. Fortunately, government spending has been growing quite a lot because of build, build, build. So that's kind of offsetting it a bit. But that said, your GDP will be below forecast because of the slowdown in consumption due to inflation and destruction of income, and second, it's real GDP. So any above forecast inflation takes out straight from that. So that's why there's a downgrade. Now, if you're now speaking of Shakey's, okay, Danny, how many people do you know can actually make a pizza at home? Okay, that particular restaurant. I mean, because no one can have, right? So I mean, like you were like a different restaurant, as you can do lutong bahay. It's tougher. People probably make it at home, but Shakey's is not only hard. Pizza's hard to make at home. It's nice delivery food. It delivers well. So that's why I guess that one recovers quite quicker than the others. You compare it with the Jollibee, which is probably at 40%, 45% of pre-COVID levels, and then some restaurants even worse. So actually, Shakey's, by virtue of its food and brand name, is actually recovering quite faster than the others. Now, if you're looking at by geography, foreign locations like for Jollibee are in 90 to 100% of pre-COVID levels already. So it's really the domestic ones that are having a hard time.
Okay, so it's a matter of the product itself and the story that it has
Yeah, it's
rather
a lot of different things
on the
actually.
consumption excitement here. All right, let's talk about mining sector and your thoughts on this. This has been undervalued for so long, battered even in fact when all of these closures happened, and then suddenly a lift on the ban, and you've got of course at Oceana Gold and even other players, plus the prices of commodities also rising in this period. Is this something to be betting on long term? Is this a knee jerk reaction from all of these bans being lifted, or is there something to be said about the mining sector really having a role long term in this recovery?
Okay, I'll answer those one by one. But take it from an investor perspective. The mining sector has been worse than dead ever since the moratoriums of like what 7, 8 years ago. So coming from such a low base, just by lifting the moratorium, there's already hope. Then, as you said, the commodity prices are also moving higher. So again, that's a very big positive on the revenue stream for miners that have operations. Now, if
Okay.
you do not have operations yet, even though there's a lifting, if you're open pit, there's still lots of hurdles to jump through to get your operations started. So it's no longer impossible. It's now like possible but difficult. So those that have operations that can take advantage of the higher prices already, this is going to go very well for them. The other thing is, recently one of the reasons the market has been weak is because the peso depreciated significantly, like 5% over a month. One of the very few sectors that will benefit from this is actually the mining sector, because most of the revenues are in dollars, okay? Except that we don't really have a lot of large listed mining companies here. So if I had to pick one, Nickel Asia would be the mining stock to invest in.
Okay, very exciting here. So as you mentioned, the ones already in operation are set to benefit right away, and the weaker
Yes.
so boding well for their exports, especially as commodity prices rise. Thank you so much for those insights, Miguel Agarao of Philequity.
Take care, stay safe.
Checking in on the headlines, we're keeping our eyes on. The government is looking to raise more funds with its first ever retail dollar-denominated bond, or RDB, mainly targeting overseas Filipinos. National Treasurer Rosalia De Leon said the Treasury will launch the onshore RDBs by mid-August to provide a safe investment opportunity at higher rates for small investors and OFWs. The RDBs will be available at a minimum investment of $300 or 15,000 pesos, making it more accessible to retail investors. Proceeds from the proposed fundraising activity will be used to fund the government's recovery and resilience programs, as well as big-ticket infrastructure projects. The last time the Treasury offered dollar-denominated bonds was in December of 2021 when it raised $500 million in 10.5-year bonds from $1.7 billion in total bids. And this from the Philippine Star. Presidential Advisor for Entrepreneurship Joey Concepcion is pushing for the implementation of safe spaces with increased workforce capacity. That is as soon as each building achieves 80% vaccination or herd immunity. Concepcion says these safe spaces would enable businesses to stop the transmission of the virus and optimize operations. Although Palace spokesman Harry Roque said the interagency task force has yet to discuss this proposal. In other news, the second batch of US-made Moderna vaccines from the COVAX facility have arrived at the NAIA Terminal 3 from Singapore. 194,400 doses are consigned to the health department, while another 56,400 doses were procured by ICTSI for a total of 250,800 shots. This entire shipment was immediately transported to the cold storage facility in Marikina. Meanwhile, the government is now mulling over including Thailand and Malaysia in its travel ban due to the surge of Delta variant cases. The DOH says it is closely coordinating with health authorities of both nations to better assess the situation. And that's the first look into the business day. Today is Friday, July 16, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.